Hello, welcome to Finance 101. On today's episode, I'm going to talk about why I choose to put my money in the stock market over savings account. So, if you know, as you know, savings right now is paying very, very low interest. And that's because even if you're buying a house, you're getting a very low interest rate on your mortgage right now. So it's only fair that if they're giving out low interest rate for your mortgage, the same way they're going to give you low interest rate on your savings. So right now, if you were to put your money in a savings account, you'll get anywhere probably 0 point something, maybe 5 or 6%. And I have a little bit money sitting in my savings account that is only going to be sitting there for a couple of months. And the bank called me and said they're going to give me 1.25%. So even at best, 1.25% is nothing because it's just not enough for you to be compounding your money, for the money to be sitting in your bank account. And you have to have a very good amount of money if you are even going to get that much of interest rate. So I put my money in the stock market because, as you can see here, if you buy very good companies, you're going to be compounding anywhere with dividend and everything. You're going to be compounding anywhere from, say, 10 to 30%. Say 10 is a little bit on the low end, but the 30, if you can compound 30% a year over a year, that's really, really good. But it's possible. And also, you got to get the best stocks if you're going to compound something that high. So if we look at this account right here, if you're buying the Amazons and the Apples and the Nvidias, it's a very, very high chance that you're going to be compounding very high interest rate because they are one of the best companies around and they do what they do very, very good. So that's why you're able to compound in that high of an interest on your money compared to the money sitting in the bank account where you're basically getting nothing out of it. So if I look at my portfolio right now, most of my stocks is very, very high and good stocks in here now, with the exception of a couple of stocks that kind of took the risk a little bit to see how it's gonna do. So most of them are good stocks, except a couple of them. The couple of them are, I'll say, the WWR right here and UEC. I'll say risky too, and DIV here. But I'm very impressed with the DIV because since I got it, as you can see, I'm up $14 here and it's what, 5.15%. That is good, and that's not the only thing that is good about it. It's a Canadian company, and I found out that they pay dividend on a monthly basis. So since I got it, I got, I think, 2 dividends so far. Every first of the month, they pay me close to $2 on dividends. And that's because I have 100 shares of it. So I'm going to be adding more shares to this, try to get somewhere around, say, $5 to $10 dividend every month. And as you can see, $286 in here now. Okay, so $286 in here. And if I had $286 in the bank account, right, in a saving account, there's no way they're going to pay me anywhere close to $2 on a monthly interest. If I get lucky, I might get even 3 cents out of it. So these are the reasons why I put my money in the stock market. But you also have to consider how things are right now. And because of the COVID and other things going on, and everybody think that it could be recession and all this other stuff. So you also have to bear in mind that you gotta find the best companies to buy, the better weather companies that will withstand any kind of economy that's going on. And those companies are your Apples, Amazons, and your Googles, Salesforce, and most of the other companies I'm thinking of buying, because you gotta stick with these companies. Most of them are growth companies that are gonna keep growing. They might not pay dividend, but at least you know your money will go up. So you need to stay away from the companies which are risky, and if something were to happen now, it can drop say 15-20%, and there goes most of your money. That is why I like taking the advantage of the fractional shares on Wealthsimple and buying these great companies. I might not own as much or even one share of it, but for what I own, at least I know I don't have to worry about losing my money. So I have 3 shares of Apple. If you go into the Apple 3 shares I own, on the average price, I bought it for $126. And as you can see, even though it was down yesterday 1.01%, I'm still up $85. If you go to Amazon, I didn't put that much money in there either. I think I put like $100 Canadian. I got like 80 something US. But even though I owe like things 0.0239%, I'm still up $4. And I don't even have this for a month yet. And if you put $84 in the bank, I'm sure there's no way you would have been up 5.61%. Let's go to another one, and just to see what I'm trying to say here. So Bristol and Myers. I think Bristol Myers pay interest, but I have it for a while. It goes up and down a little bit, but still, even though it has been going down, I'm still up a little bit. That's still good. And what's the last one I just bought? I think Salesforce. Let's see what we have in Salesforce here. The same thing with Salesforce. It went down. Yesterday was a bad day. It was a lot of stocks that went down. Even if you look up the crypto site, Bitcoin been going down, and all the other stocks follows Bitcoin, like crypto wise. When Bitcoin goes down, all the other stocks follow it because they all trade side by side, and it wasn't the best of days because the day before I was up $40, and yesterday I think I was down around $14. So it's still good. Like, remember, this is for long term. That's what we're doing this for. So it compounds, you reinvest your dividend, and you look up one day, say 5 to 10 years from now, and you'll be in a very good position. So this is the reason why I choose to put my money in the stock market instead of just leaving it in the bank account, where the bank will take my money and give it to somebody. They charge them 20% on interest on the credit card, turn around and give me 0.5 or 0.9%. So that's just me saying you gotta take charge of your money and put it where your money grow for you. Let your money work for you because you work hard enough to get your money. Bye for now, and don't forget to subscribe, share the video, and as always, I'm gonna leave my referral link in the description for Wealthsimple. If you register through Wealthsimple through my link, you will get 2 free stocks, and I'll get a little bit of a kickback. I get 1 stock for myself. So that's it for the video, and I'll see you in the